Hello to all traders and welcome back to another market review brought to you by Orbex. So it seems that indices are finally correcting after the Dow, the Nasdaq and the S&P all fell lower in the last couple of trading sessions. We've seen the S&P, which is on the screen now on the daily chart, really starting to fall from its record high, dropping a few hundred points towards the 5,000 area, and that is now the new support that a lot of traders are looking at as well. So as we get into the market week, we're just waiting for the next round of news to come out, the next fundamental headlines to start picking out where we can start looking at where the indices will be going to. On the RSI, as you can see, it's going pretty much as the price action is showing us at the moment. If we go on the 4-hour chart for the S&P, as you can see, there's not really too much to bring into the frame here. All that we knew there was a correction coming at some point. We just didn't know when, because the signals were that every time there was a bit of a downturn, obviously, as you can see, the gap was filled and then there was another momentous push to the upside. So this is how it's been for quite a while. Then we got quite a resistant top there, just below the 5,300 area. And since then, we have had more of a downward bias. So is this going to continue? Are we going to have more of this correction starting to move its way lower? Well, we'll have to wait and see. Obviously, global tensions, job numbers, the Fed, these are all factors in why we're seeing a bit more of a price turnaround on the indices at the moment. But let's have a look at the Dow as well. The Dow is something we've been looking at for quite a while because it was performing a little bit, well, not as good as the Nasdaq and the S&P, and we did see more of a correction on this particular indice. But as you can see, a few hundred points being dropped off since it tried to hit a peak above 40,000, now trading just below 38,000. So a couple of thousand points being deducted from the Dow, and we're just waiting to see again if this is a full-blown correction or if we're just going to have a slight retracement. But if we look on the 4-hour chart, like as you can see here, it's pretty much going this opposite direction of when we were in the bullish run. So we're really looking bearish now. Price action on the RSI has started to have this kind of bearish channel as well. We're just waiting for a slight pickup. If we do get into oversold territory for the Dow, there could be a potential bearish divergence that we could lock onto. But you know, being a CFD, we are looking at the opportunities and the positives that the Dow and the other indices are falling lower. So just keep an eye out if we do have more fundamental news events coming out. We obviously, the Fed has come and gone, but obviously interest rates, CPI data is and NFP data is still lingering, and with the progressive jobs data, we're not looking likely that the Fed is going to cut rates anytime soon, and possibly not even this year as well. So this could be a big factor in where not only the indices are going, but the dollar is going as well, and vice versa with gold. So it all adds up into one formula, and we'll see what happens in the near term as well. But as usual, we'll bring you all the comings and goings and all the fundamental headlines on our YouTube and Telegram channel. So stick with us, stay ahead, and we'll speak again next time. Bye for now.